Good morning, good afternoon, and good evening, everyone. My name is Trang, and as usual, I'm delighted to be your host for today's Refinitiv Perspectives live stream. The COVID-19 pandemic has challenged businesses across every sector around the world and has no doubt impacted deal-making landscape globally and across APAC. According to a recent investment banking review released by Refinitiv, which evaluates the first 9 months of 2020. M&A deals have actually increased in value in APAC, excluding Japan, although the number of transactions have fallen. IPO deals, in turn, have also increased in value and have reached a decade high, up by 60% compared to the same period in 2019, mainly driven by Chinese IPOs, which account for 84% of the region's IPO proceedings and almost half of global IPO value. Interestingly, sustainability bond issuance have tripled in comparison to last year, including a surge in green and social bonds, likely driven by COVID-19 relief and recovery efforts. So today's episode will look at the deal-making landscape for APAC, including the state of sustainable finance, the impact of COVID-19, and what the future holds as we approach 2021. And I'm delighted to be joined by two great subject matter experts today, Nicole Chen, Managing Director for China, and Elaine Tan, Deals Intelligence Analyst for APAC and Japan. Welcome both.
Hi, Trang.
Hi. I wanted to kick off our conversation with a question for Elaine. As economies struggle with the fallout from the pandemic, what do you see as the current state of the market?
Yeah. Okay, so thank you, Trang, and good afternoon, everybody. 2020 has been a bit of a roller coaster ride. So allow me to give a brief background and a little recap on how the pandemic has affected deal making in previous quarters. Because at the start of the year, we actually saw healthy levels of deal making activity globally. In Asia, the region was affected by the pandemic much earlier than other regional counterparts, so it was a bit of a slow start. But then taking into consideration that the first quarter can be also relatively slow in the region because of the long year holidays. But then as economies, implemented lockdowns in late March into April and May, basically to curb the spread of the virus. So M&A and capital markets activity stalled and took a pause. I think that would be the best description. So we've seen lowest monthly activity in April globally, as well as in various regions. Now, what's interesting is, this quarter, it was quite a surprise to see how quickly deal-making activity has recovered from the lowest activity in the second quarter when the pandemic took a toll on M&A and capital markets as, majority of the deal makers reassess how to get things done, what business models and valuations would look like post-pandemic. And in a way that created a potential backlog of M&A transactions, just waiting for better conditions. And what we're seeing now actually is, whether these backlogs or deals are coming back into the market or strategic buyers finally finding opportunity in low valuations or, private equity acquirers with big war chests, because there has been quite high levels of fundraising activity in private equity space since 2016 in Asia, and they're probably snapping up companies that they have been eyeing as attractive pre-pandemic, and that's driving a flurry of mega deals announced over the past few months. And there's no question that the M&A landscape has rebounded far earlier than we were expecting. And a lot of these mega deals were announced during the third quarter of this year. And the big ones were actually involving China. There's been a lot of consolidation around their oil and gas sector. And then there has been a few jumbo deals as well involving Japan as part of SoftBank's 41 billion asset sale. If some of you may know, SoftBank has been quite active with their acquisitions over the past few years, especially when they set up their SoftBank Vision Fund. So that was a bit of a surprise for us. Now, for the capital markets perspective, one of the earlier main themes this year, as the director of Deals Intelligence, Matthew Till, would coin it, is capital markets to the rescue. We've seen bond offerings, across various product types, from investment grade corporates to sovereign issuers. They were just tapping, bond offerings at a record pace. And, Asian issuers have been catching up as well and tapping the G3 bond markets, G3 like US, dollar, euro, and Japanese yen bond markets, because they were driven by low interest rate environment. So there's also been various bond buying programs. Monetary conditions remain relatively loose. The companies are really taking opportunity of those conditions. Now, in the equity capital market space, it's the same momentum, I would say, as they have been very active. Asia Pacific offerings are at an all-time high, as you shared in your introduction. They're currently dominated by China. But even markets like India have seen significant record levels of issuance. Companies are raising capital through follow-on offerings to basically help their balance sheets, especially those that have been affected by the downturn. So aside from follow-on offerings, IPO is something that has been very a hot topic as well. Companies are tapping the IPO markets to manage liquidity and operational needs. Again, especially those that are affected by the downturn. And like you said, China has been leading those IPO issuances, and a lot of them are now listing in Hong Kong as well as China. And in fact, we are looking forward to one of the biggest IPOs this year, which is the Ant IPO, and it's expected to raise around 34 billion, and that has in a way been very well received by the market, and that seems to bring sort of positive sentiment in the IPO space as well.
Thank you so much, Elaine. After such a comprehensive introduction to the IPO and M&A market across the region, Nicole, I wanted to turn to you to perhaps pinpoint some of the key IPO and M&A trends in China specifically, especially as the Ant IPO has been kind of dominating news headlines in the last couple of days.
Yeah, sure. Thanks, Trang. Hello, everyone. The regards from my office in Beijing. So I think we are monitoring the Chinese capital market for a long time, and found that despite the COVID-19 of this year, the whole market, the China market, capital market, has performed very well and kept active. So according to Refinitiv data, we are seeing that the amount of M&A related to Chinese domestic market increased significantly in the third quarter of 2020. While another trend, we are seeing that the overseas M&A in China has continued to decline. So that will be very interesting to different development in the market. So to be more specifically, from Q1 to Q3, China-related M&A reached 400 billion, so increased by 30%. And especially in the third quarter, it rose 95% from the last quarter. I think this is also benefit to the whole China economy recovery. So the number which was the peaks since the Q4 25. And if we are talking about the industry specifically, we are seeing that the largest M&A volume came from the energy and power sector, while the technology sectors maintained the same. And the proportion of the industrial, financial, and real estate and the other sectors are declined. If we are looking at the breakdown details, so China total domestic M&A volume reached 340 billion, increased very significantly, about 45% than last year. But just like I mentioned, the outbound M&A decreased by 21%. So China has slipped into the probably the ninth placed among the world's most active buyer of cross-border activity. We also noticed that the number of the merge and acquisition in the BRI countries, the Belt and Road countries, was 81, so only 40% volume of last year due to the impact of pandemic. We also noticed another interesting things is the foreign company are also gearing up to acquire domestic companies, reached 34 billion in the first 3 quarters. So if we are looking at the IPO specifically, in the first 3 quarters, the total volume of the China IPO reached a very high number. So it's about 85 billion, and which is about 150% more than last year. And the number of the IPO also increased almost double than last year. So among them, we also can see that A-share IPO raised to 46 billion, and the number of the A-share offering rose also over 100%. So I think the biggest shining point of the China market in 2020 is the newly announced registration-based IPO system. So the number told us that from January until now, about 60 companies have listed on this market. So I also mentioned earlier that the number of the Chinese overseas listing rose sharply. We're similar with last year. Many companies choose to go public in Hong Kong. For example, China Pacific and Insurance and Yangtze chose to list in London. And due to the star market and a registration-based IPO, listing in China also become the best choice for many Chinese companies, especially in the high-tech industry. So we all talk about the Ant Financial. This is a really big news in the headlines in over 2 weeks. So everyone is talking about the Ant Financial. So I think what I want to say is that data tell us that China's capital market didn't impact by COVID a lot. I will see it still remain a very relatively strong momentum. Over to you.
Thanks, Nicole. Yeah, it's a great insights, and I think we will come back to some of the points you've made, especially around what Chinese companies are now doing post-pandemic. But I think you touched on outbound M&A, and Elaine, I wanted to actually ask you about the China outbound story and what your thoughts are now versus, I think, 2016, which was quite an interesting year as well.
Yeah. So, as Nicole mentioned, also said, it definitely has seen a decline this year. So China outbound or overseas acquisitions by Chinese companies, they peaked around 216. And globally, it was also during that time when, there was a growth in global cross-border activity. Sometime 5 years ago, around 2014 to 2018, but China really saw the peak in 2016. And during those times, Chinese buyers were quite aggressive into this space. They were making acquisitions in various sectors across the globe. And in a way, I feel like it relates to how China is shifting direction of, economic growth from manufacturing and exports to a model now driven by technology innovation and industrial know-how. Then around that time, that was also when the regulatory hurdles started to come in. Local regulators tightened capital controls, while recipient countries were also becoming more cautious, and Chinese acquisitions, in the US and Europe, they were facing tighter government scrutiny. And that has led to a 4-year decline since its peak in 2016. And so this year, China outbound actually witnessed its lowest year-to-date level since 2019. So that's more than a decade. As headwinds continued to sort of deter that deal-making activity, just a lot of different factors from regulatory hurdles, geopolitical tensions, protectionist sentiments, and again, to the recent, coronavirus pandemic. So it's not a very conducive environment for cross-border deals compared to the boom in around that 2014 to 2018 period. So now it's just not, the same conducive environment to sort of ramp up overseas buying at the moment. So, and as we saw big declines in Chinese acquisitions overseas this time, and since last year, we've actually seen more Chinese inbound activity. It was around last year when we started to see inbound transactions, or I would say, foreign companies acquiring Chinese companies. There were more inbound transactions than outbound, and that's something we haven't seen since 2017. I guess, foreign companies are taking advantage of looser foreign ownership limits, or, and are betting on Chinese consumer demand. So the transactions has become more domestic in nature. In fact, like I mentioned, the mega deals this year were actually domestic consolidations. They were part of the Chinese SOE reforms, consolidations of the oil and gas pipeline assets. So PipeChina, they acquired oil and gas pipeline assets of PetroChina. That was around 49 billion. And Sinopec, there were around a total of 4 deals, and that had an aggregate total of around 25 billion. And that brought it to a total of 75 billion. Can you imagine that? Like 75 billion worth of deals just driving domestic activity in China. Also, Chinese companies have, relatively easy access to domestic capital, as witnessed in the growth in equity and debt capital markets. And there's a lot of opportunity for growth in the domestic market. And I think that's also driving the activity, in China instead of going overseas.
Thank you, Elaine. And I guess you mentioned about inbound activity, and Nicole, you touched on the massive growth regardless of the pandemic in China. I also wanted to kind of touch on the impact of US-China tensions on capital raising and investment banking activity, and whether you see that companies in China that are looking to go public, are they still considering the US as an attractive market, or are they, again, looking perhaps more domestically? Perhaps I could start with you, Elaine, and then Nicole, if you want to add.
Yeah, sure. So we are actually seeing, two trends around that. But to answer your question, I would say yes, U.S. markets still remain attractive to Chinese companies in terms of capital raisings. And yes, we do see a trend of these U.S. listed companies coming back to domestic markets. Early this year, we've seen NASDAQ issue tougher listing regulations for foreign companies like China. And, they certain requirements like minimum value of the size of IPOs, better disclosure, that could make it more difficult for some Chinese companies to list on the exchange. So there were actually a lot of expectations that would curtail Chinese listings in the US. However, based on Refinitiv data, that's something that's not a case actually. Chinese listings in the US have raised over 8 billion so far this year, and that's already triple the amount of proceeds raised last year, and that's a 6-year high, or I would say, since 2014 when Alibaba listed in New York. And even the number of IPOs in the US also grew 20% from a year ago. And, and the list is actually still growing. We have Lufax holding in the pipeline, expected to list in New York, and, could raise around 2.2 billion. And the U.S. market still offers some access to global capital for these Chinese firms. We have deeper liquidity, quicker listing application process, especially for tech companies. Although I would say U.S. market is definitely facing huge competition with Hong Kong and the newly registration based system Star Market, and even the reforms in Chinex is becoming really attractive. And so listing in the US is still a very small fraction of the overall Chinese IPO, as companies still choose to list in domestic markets or in Hong Kong. Now, the other trend I mentioned is, since U.S. listed companies are facing tighter scrutiny in the U.S., similar to Luckin Coffee. The other emerging trend we see is, there's been a number of U.S. listed Chinese companies, you call it going home, to China or Hong Kong, such as Alibaba in 2019. You have JD.com, NetEase, and these are huge, huge capital raisings in Hong Kong. JD and NetEase alone this year raised around a total of around 7 billion and secondary listing in Hong Kong, and that also kind of pushed activity in the region. And we could expect to see some more firms to sort of follow the footsteps of these companies.
Yeah, so I fully agree with Elaine's point. So from the China market perspective, we're also seeing a similar trend. One is the U.S. market. The Nasdaq is still keep very attractive for the Chinese company to go listing. So this number has not been impacted a lot according to the Refinitiv data. But absolutely, Hong Kong become more attractive, for those Chinese companies to back to home. So Alibaba, JD, 163. So Elaine mentioned there, or this company have they call it secondary listing in Hong Kong Stock Exchange. So I also read a very interesting number that in the first 3 quarters of 2020, there are around 70 Chinese companies listed in Hong Kong, including the secondary listing. So this number has increased by almost 40% from the same period last year.
Yeah, and sorry, just to add also for Hong Kong, why it's always been very attractive for Chinese companies. It's in a way it helps with their global financial strategy. They get easier access to capital when they plan to use or invest it overseas or operate globally, more than in the domestic market, because they still need to sort of get approval out of when it comes to capital outflows.
Thank you both. And I guess you mentioned the Hong Kong Stock Exchange, and I think in some of your previous answers, you've touched on the STAR market. So what do you think, how did the new Chinese stock exchange actually impact deal making in the region, but also globally? Nicole, what do you think?
Yeah, well, I mentioned that the establishment of the STAR market and the new registration-based IPO system are really big moves for the China capital market. So from Chinese company perspective, the domestic capital market gradually became the most ideal market to get listed. I see a number that in 2020, that 63 companies have been listed on the STAR market. So that's I think it's a massive, very tremendous number. And the IPO-based registration system greatly simplifies the difficulty of the listing compared with the previous system, so that more innovative companies can have the choice to list in under this new system. And financial is the great example, right? We can see that in future, I will foresee that more and more companies, Chinese companies, will choose to be listed in domestic market. But as Elaine and I mentioned before, I think the number of the company listed in the U.S. market hasn't been impacted a lot. So we have seen this trend are still to keep increased compared with the previous year. So which means that U.S. is still one of the main channels for Chinese companies to do the overseas, in particular for IPO. But we also figure out that the company may decide which markets they prefer to go public, whether this is a Hong Kong stock exchange or the U.S. market or even the domestic China new system, right? And I think right now the options in front of the investor is actually very diverse compared with the previous year. We have seen that the company related to like the the livelihood kind of industry prefer to IPO in the domestic market, such as SMIC and Ant Financial, this kind of company. But small and medium size of the fintech, high tech companies, they may have choose their own needs because there is a lot of options in front of them. I think this is a really big development from the China investor. We are not talking about only one channel or two place to go public. Actually, we have various of the options here.
Thanks, Nicole. Before I move on to some of our sustainable finance questions, I want to just take one of the audience questions, which is really looking at the Indian market and what's happening there. And I thought maybe, Elaine, this is a question for you, if you're able to kind of touch on it.
All right. Sorry. So the sustainable finance review and key highlights. So just a bit of background as well. We launched a sustainable finance review to sort of provide a comprehensive figure on how much new capital is being issued over financial markets towards sustainable outcomes, regardless of financial instruments. So it captures both, the full sustainability landscape, basically, from sustainable products, including the green bonds, and the result of partnership with Climate Bond Initiative to sort of validate transactions that are consistent with the ICMA green bond principles. We have the social and sustainability bonds and even green loans. But aside from that, we're also looking at the use of sustainable proceeds and companies operating in sustainable industries to provide a complete view of total capital raisings in support of sustainable outcomes. And the report that we produced recently for Q3, it shows like a significant increase across asset types, with the resurgence of the equity capital markets, equity offerings by sustainable companies. They actually reached almost 10 billion during the first 9 months of 2020. 38% of that went up. It went up 38% from a year ago, and majority of the issuances were done by the Americas, and then that was around 77%. Asia Pacific was around 12%, and Europe 11%. Now, in the mergers and acquisition space involving sustainable companies, and that also totaled around 22 billion during the first 9 months. It's also up 7% from last year. Asia took 40% of the market share by value and number of deals. China captured around 17%. Sustainable lending raised around 114 billion, a minimal increase of 1% from a year ago, but still it's a growing market. And finally, we have the sustainable finance bonds, which currently is the more mature market, I would say. It totaled around 360 billion during the first 9 months of 2020, and that's up 96% from last year, and it's actually a record high as well. So that was driven by green bond issuance. It accelerated during the third quarter. It also reached an all-time high of about 76 billion from 171 issues. And driven by the increase in capital raisings by sovereigns, multilaterals, and banks, for COVID-19 relief and recovery efforts, we saw a significant increase from a year ago on sustainability and social bonds. In fact, social bonds have raised a recorded 85 billion globally, nearly 8 times the total raised from last year. Sustainability bonds, sustainability bond issuance around 97%, more than tripled the level since 2019, and the number of sustainability bonds increased 101% from a year ago. Europe was the most active market for sustainable finance bonds. America's 18%, 28%. Asia Pacific was 18%. So it's a very interesting area of growth. Sustainable finance is something that it's still a very small percentage of the overall investment banking market, but it's definitely gaining traction in space that we'd be continuously monitoring.
Thanks, Elaine. Again, very comprehensive overview, and I'm glad to see this growth actually even on a personal level, since obviously sustainability and sustainable investing is something that I'm very passionate about on a personal level. But I think I wanted to, I guess, pick out the figures you've mentioned around sustainability bonds and the increase in green as well as social/pandemic bonds, especially because of COVID-19 relief efforts, which I mentioned in my introduction as well. And Nicole, I just wanted to get your thoughts. Do you think this is a trend that will continue on the long run post COVID-19, or is it just a reflection of what's been happening in 2020?
Yeah, so I will say the answer, my personal opinion is absolutely yes. So it is true that the China's green bonds are growing very fast. I remember in last year, 2019, China has issued about 57 billion of the green bonds in 1 year. So it's not surprising to see that China ranked number one in the green bond space. Um, However, this year, impacted by COVID, China issued 17 billion of the green bonds in the first half of the year. Although the volume has been declined. However, considering the pandemic situation in the first half of the year impacted for China market, I think we will see that in the second half of the year, this number will go up very significantly. And from what I am observing right now from the China market, that the outbreak has made the China government paid even more attention to the development of sustainable finance. So in May this year, China has issued a series of the policy to clarify the standards of green bonds. And China has also issued the green bonds related to COVID-19 this year. And I can see that the government guidance plays a very important role in the development of the green finance development in China. So the Chinese government is really trying to promote the development of the green finance and establish the relevant social system. So which is one of the I think government's main strategy, and being pushed from top level to the bottom level. So given that China can mobilize enough, the marketing resources and social forces to participate and ensure a very smooth development for the future. We can see that, for example, ESG is getting more market resources support and attention. So more and more Chinese banks and brokers has participated in the ESG related activities very proactively, and the insurance scale also gradually increase. And on the other hand, we are seeing that China's green finance is quite diversified to meet the needs from the various institutions in the market. For instance, the Chinese government introduced a new policy in January this year to encourage the financial institutions to issue the blue bonds. And we can see that soon later in May, Bank of China launched the China's first blue bond, which was widely welcomed by many green institutions and ESG investors. So this blue bond has been actively, accepted by the market, which I think reflects the recognition and support of the international capital market for sustainable marine economy projects. And we also see that sustainable finance is widely recognized than the previous year in the China market. We also heard that from the President Xi's announcement that China will become the carbon neutral country by 2060. So those kind of action, I think, will create massive investments and benefit the development of the green finance in the China market.
Thanks, Nicole, and really glad to see that blue bond announcement actually, because it was, I think, also the first in the region and only the fourth in the world. So hopefully more marine-related bonds like that will come in the future. I just wanted to turn to the audience question. Lots of interesting questions here. So I'm going to start with one, I think, for Nicole, which is really looking at comparing what's happening in China and the fact that the deals market is really going strong and there are plenty of IPO deals. What are the factors behind, I guess, China's success while the rest of the world's economy is pretty much collapsing?
Yeah, I think probably if compared with the other market, I think maybe the biggest difference is that the COVID situation are under very well control in China for now. So just like talk to you right now, we have seen that almost all the banks, the brokers, the SOE companies, corporates, they are all resumed to the work. A few months ago, right? So I think so that's number one. Number two, if we are looking at the Q3 newly announced China economy data, so the GDP recovery, the data is really encouraging. So I think under this kind of the big the better recovery of the economy, so that's give the market more confidence and a help to do the more the IPO related and the capital market related activity. So I think probably I would say this is the biggest difference at the stage if we compare with the other countries. Yeah.
Thanks, Nicole. And I'll go back to another China question, but before that, I wanted to just circle back to the question from the audience on the India M&A and IPO market and just get your thoughts, Elaine, on what you think.
Yeah, so India is actually pretty interesting because overall M&A of India actually declined. It saw a 1.5% decline compared to a year ago. Target-wise, domestic activity, they went down. But what's interesting is that, we are seeing high-profile deals as well coming in, although it's not enough to really bring the volume up. There are very significant deals happening in India, particularly, geo platforms, investments from Facebook and Google, and even from a private equity investments, that particular company has already received, around almost 15 to 20 billion worth of investments. And that is in a way sort of highlighting, how companies in India in tech and telecom has been quite attractive. Another thing for India is that we have seen a few, investments into online education as well. As I would say the pandemic has definitely changed the way people have been incorporating tech or tech-oriented into their daily lives, and one of them is either remote working or online education. So that actually is seeing quite a boom in India as well. So that's from the M&A perspective. For equity capital markets, they have actually also seen like a huge increase in equity offerings. They hit an all-time high. I think they raised about 32 billion during the first 9 months of 2020. That's about 87% increase in proceeds, and even surpassed like the annual record last year. And that's mainly driven by a lot of the follow-on offerings by Indian companies. And in fact, we saw, Reliance had a rights offering of about 7 billion in June, and that's one of the largest ECM offering of an Indian company. So again, a lot of them has been driven by the pandemic, but then also they're really taking advantage of how current market conditions are making it conducive for deal making.
Thanks, Elaine. And I'm conscious of time, but I wanted to address the final question from the audience, which is, again, going back to Chinese IPOs. Considering the increase in tech IPOs and the data security differences between the US and China, where would Chinese multinationals shift to find liquidity in the global equity market to rival that of the US? Perhaps the both of you can comment, but maybe we can start with Nicole. Yeah.
Well, this very interesting question. So my personal opinion is that I think I have covered a little bit in my previous part. So I think it really depends on this company's industry, as well as the which market that the companies is looking for the further development. So I think right now the good thing, the beauty is that for all the Chinese, no matter this is the international company or it's a purely domestic Chinese company, I think the options put in front of them are diverse. So I think it is really depends on the owner of this company, which market they would like to pursue the further development and to get the more investment. So Hong Kong, maybe it's Hong Kong or London or the US market, or even the China domestic market. So I think I have mentioned a couple of times about the new system, the registered based IPO system. So this is really a big difference with the previous system, because that simplified a lot about the application process. So which make the companies more easier to get investment from the domestic China market. So I would say that probably this is more like I will see the multi, the different trend in the future for the Chinese company to choose go listing in the overseas market or in domestic market.
Oh, so I'd like to agree with mirror some of what Nicole said, because I do agree with what her point was. So, and like I said, based on the data that we have, although US remains attractive, the markets like Hong Kong and China and with the London, connect, that has been like pretty attractive as well for Chinese multinationals. So and as Nicole said, it depends, where do they plan to use the money? What's their financial strategy around it? So that would also help them sort of decide, are they listing or coming back to the domestic market or tapping other international markets like Hong Kong and London. Because we actually have been seeing quite, like I said, a few tech companies and not even tech, like tech-oriented companies or, fintech or these new economy types of companies, listing in China and in Hong Kong. Like I said, JD.com, NetEase, they're now coming back to the region's, market. So it's pretty, they have a lot of choices aside from the US. So.
Thank you so much, both. I wish we could continue on, but I think time is up. So I just wanted to thank you for joining us today and for sharing your insights. And before I wrap up, I just wanted to remind everyone that the Sustainable Finance Review that Elaine mentioned is actually available. So if you scan the QR code on screen now or click on the link shared in the chat, you will be able to sign up to it. And as always, do subscribe to our social media channels to get notified about our next live stream episode. And I look forward to seeing you in our next show. Thank you and bye.